Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for the segment, we have Brian Stutland, Chief Investment Officer, Equity Armor Investments, for an update on Nasdaq-100 performance, volatility trends, and how investors can use EAVOL in their portfolios. Brian, it's great to see you as always. Welcome back to Trade Talks. And here we are. It's Thursday afternoon, November 4th. The Nasdaq-100's up 1.25%, somewhere around there. And look at our backdrop, though. We're talking about tapering, inflation, supply chain constraints, and stocks are at all-time highs here.
Well, we are talking about all those things, but I think some of that is actually a little better for the markets than people expected. For one, when you look at the Nasdaq and interest rates, the 10-year note is down today. That's been good for big, large cap tech names, right? Because now they can borrow at better rates, expand their balance sheet, expand their growth from that off of a low interest rate environment. And I really think Powell gave a very dovish talk. I think tapering could occur a lot faster given inflation rates. I think they could be looking at raising interest rates in the short term, and that doesn't seem to be happening anytime soon until we get better employment picture, according to Powell. So all that I think is actually pretty good for large cap tech, and that's why we're seeing it. And then, Jill, you mentioned the supply constraints. I think we're overcoming that. When you look at the chip sector, the earnings reports out of a handful of these big companies were very good. Tech and semiconductors have been on the move to the upside. We started buying some of those names this summer, feeling like some of this would abate, some of these supply concerns around the semiconductor industry would abate here and move higher. And I think that's been the real kicker. Massive inflows into SMH semiconductor ETF at the end of October and at the end of September. That's really given a lift to the rest of the Nasdaq right now.
Right. So it sounds like the earnings is really supporting the valuations that we're seeing in the markets. The profit margins have been pretty good. I guess the real tell will be when we get the retailers to start to report and see what their supply constraints are. But Brian, let's look at something more on the technical side of the picture. Anything you're seeing in VOLQ, of course, the Nasdaq Volatility Index, or any of the other volatility indicators that you watch that could suggest any choppiness, or, it's a seasonal time of year where stocks do well, that it could be, relatively smooth sailing for the end of the year outside of any, surprise events?
Well, if you look at the markets today, it looks like smooth sailing. But when you take a look at some of these other volatility indicators, VOLQ, for instance, measuring the volatility in the Nasdaq-100 or the VIX, when I take a look at some of those things, what I've noticed basically is we're seeing now over the last couple of weeks, volatility actually stabilize, in fact, move a little bit higher as the markets have moved higher. So what that tells me is hedgers are out there buying puts on the downside in this market to sort of keep volatility levels bid up. So as we move higher, there is a little bit of concern that hedgers are coming in. They're expecting some sort of correction. We've had such a massive run right now. It makes sense to maybe take a little off the table. That's why for me, I am long volatility along with being long the NASDAQ together. So at least I have some sort of hedge that seems to be paying off right now. It's like I said, volatility sort of hanging in there. And to me, whenever I start to see that over a 2 to 4 week period where volatility stabilizes, it starts moving up while the market is still moving up, it's a little bit of a growing concern there. So that's one thing to watch out, as we head to the end of the year.
So, Brian, I have a heavy Nasdaq-100 tech portfolio. What do I do with EAVOL? How would that work in my portfolio?
Well, one way when we look at that is we like to use EAVOL and buy VIX futures against the NASDAQ. We do love the NASDAQ. We think it's the best index out there, if I had to compare it to the S&P or something like that. So I like owning the NASDAQ, but I also like putting together a hedged equity portfolio. And the way I do a hedged equity is I buy volatility through our EAVOL, sit at about 10% in the portfolio, use that to sort of hedge out the risk. And I think with the VIX this low where it's at right now, now's the time to sort of look at that.
All right, Brian, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.